Important thing about today is, well, we're seeing the usual people to the downside. We'll take a look at the industrials, for example. You can see down. You can see the usual suspects here. Tech, Apple and Intel weak. Materials weak. The steel stocks have been getting killed this week. And, of course, the industrials, usual declines here. Caterpillar, United Technologies, as well as 3M. Overall, for the week, though, I want to tell about the steel sectors because it's been very difficult for them. ArcelorMittal over in Europe down another big move today. Important thing here, 2.5-year low for ArcelorMittal. Look at that big drop here. But again, big story here. Their comments for the day, higher raw material costs they're seeing. There's concerns over there with the tariffs, higher, lower prices, lower demand from autos. The problems in Europe are not going away. Trade commentary is exacerbating them, but these comments and these concerns would exist even without some of those trade issues overall here. As for the markets globally, it's been rough. Everything in Europe's down 1 to 1.5% today. China is also down 1 to 1.5%. But look at the S&P down 2.8% for the week. Shanghai down 8%. A lot of people say, aha, you see, China is losing on the whole trade war battle. But remember something, Shanghai was up 30% just a couple of weeks ago, far outperforming the United States. So don't get too smug about this underperformance here in Shanghai. It is still among the best performing markets in the world, still up about 22% for the year. Let me just switch over here and talk a little bit about the IPO market and what's going on here, because everybody is very excited about Uber coming because, frankly, the IPO market has been doing spectacular this year. This is very unusual. We've had 42 IPOs. That's a lot. Remember, we didn't have anything. Essentially, in January and February, it was shut because of the government shutdown. For average first-day pop of those 42 IPOs, 22%. That's really good. That's a lot more than usual. Typical first-day pop, 13 to 15%. Overall, the recent IPOs, well, you've seen some of these companies. We were astonished at some of the first-day moves in some of them, but look here. Beyond Meat, 189% pop. Zoom, 115. Jumia, 128. Pinterest, 55. Levi Strauss, which started it all out, seems like a long time ago. Even that's up about 32%. I know. The one exception, the one that didn't work, is Lyft, of course. Lyft today, of course, we know, sitting yesterday, closing at a new low. That's up a little bit. But by the way, the valuation of Lyft, about $15.1 billion. That's exactly what the last round of funding was for that company here. Of course, we are waiting for Uber. What does Lyft tell us about Uber? It tells you, you can't just price anything you want. This is a cautionary tale for the overall IPO market. Everybody out there is saying, okay, they're working, but if you jack the prices up too much, you're going to get some pushback overall. So 44 to 50, there has been talk they may price in the middle of the range. We don't know that for sure, but there has been some talk about that. We'll see how that goes. What you can be assured of is we're going to be standing right here, 50 feet away, right at that post tomorrow, all throughout the morning and into the open for Uber.